right, we are back right now with Noah Breslau. He is the CEO of OnDeck, and we're talking about the growing trend of small businesses basically getting peer-to-peer lending. So, Noah, I know you have some pretty heavy hitters, Google Ventures, Peter Thiel behind your company, but there's also some very well-known Wall Street banks that are providing you with capital. Why are they doing it?
I think they see the market opportunity that we do. So we've been very lucky and fortunate to have folks like Goldman Sachs and KeyBank and Deutsche Bank get behind the platform and what we're doing. And I think they realize that banks have so many things going on right now. This is not a market segment that they've focused on historically. It's actually not even a market segment that's been profitable for banks to lend to. So new technology, new approaches are required, and these capital markets providers are stepping in to give us the capital to in turn lend to these small businesses.
Hey, Noah, could you tell us a little bit more about how you're actually using that new technology to harvest social information from the web in order to evaluate the companies and whether or not you want to make these loans to them?
Absolutely. So we have a number of techniques that we've developed over the years, and we collect actually 2,000 data points for every single application that we evaluate. We collect 500,000 data points every day to monitor our portfolio. It's really a combination of both public and private data sources. So the public data sources include things like social media, public records, and so forth. But the private data sources can include things like the cash flow actually moving through the business. And so the last thing I'd want a viewer to take away from this is just because someone has one negative Yelp review, they can't get a loan from OnDeck. We're really looking for healthy businesses with strong cash flow, lots of small transactions flowing through that business, and a business operator with a track record of success.
Just walk through the economics with me, because I guess I'm a spread person, right? Goldman lends to you they lend to us at LIBOR 225. I'm sure they charge a little more to you, but
that's right.
They lend to you at what? You then provide that service at what and capture what spread?
Yeah, so Goldman Sachs and Deutsche Bank provide us capital at different rates, depending on the risk of the loans, essentially. We then turn around and lend the money to small businesses, and the way our loans typically work is they're shorter-term loans. So the typical borrower might borrow for 6 months. Let's say they borrow $1. And what they'll do is pay back 15 to 20 cents in interest on that dollar. And if they're using the loan for, say, inventory, they might sell that inventory at retail at $2. So they put 80 cents in their pocket on that transaction. That's the typical use of proceeds, and it causes their business to grow.
It's like a factor, no?
Somewhat like a factor, but really it's a full-on cash flow analysis. We're not factoring any specific receivable for the business. It's really based on the cash flow and the business credit performance of that merchant.
Okay, hold that thought. Noah, Len, and Bob, we just want to get you down to D.C. Some breaking news here from the Supreme Court. Bloomberg's Megan Hughes with me now. Megan.
Yeah, Deirdre, it's a case that we were watching between Aereo and major broadcasters. We're talking about CBS, Disney, 21st Century Fox. And the Supreme Court didn't make a decision here, but they decided that they would pick it up. So this means that we're going to have a decision on this case sometime before July. And this is significant. This is something actually that both sides, both Aereo and the broadcasters, were hoping for, because they want to have some of the disagreements here settled so that the companies can move forward. Now, at issue is a matter of copyright law. So what Aereo does, it broadcasts or transmits broadcast television to internet subscribers, paid internet subscribers, and the broadcasters say that that's a violation of their copyright rights. So they're not paying, Aereo, the company, is not paying any retransmission fees. But Aereo makes the case that they're doing this on an individual basis. It's through tiny antennas and then DVRs in the cloud is how it works. So as a matter of process, they say this is exactly what broadcasting is meant to do. Public broadcasting is people with an antenna are supposed to be able to get this programming for free. So those are some of the big issues. There's going to be a hearing on this, and then they're going to make a decision, again, before July.
And
Deirdre?
some very big names in this, not least of all Barry Diller, so chances are we will be following this throughout the afternoon. In the meantime, we're going to continue our conversation. Noah Breslau rejoining us from San Francisco, CEO of OnDeck, a peer-to-peer lending combination, or rather company, excuse me there. And of course, Bob Rice joining me for this hour, along with Len Tannenbaum. Noah, why do people take loans? We've been talking about it more from the business side, that is to say the larger institutions that are helping to fund you. Why are the smaller businesses looking for money? What are they using it for?
The best use of our loans is for growth-oriented purposes. About 85% of our business owners take the loans to grow their business. So a great example is the one I did before the break around inventory, but also asset purchases, remodeling or expansion, opening a new location, potentially marketing expenses. Think of a LASIK eye surgeon, for example, who wants to do marketing to attract more patients to their practice. So really, it's growth-oriented purposes that pay back in a relatively short time frame that matches the loan.
Noah, we thank you very much. Noah Breslau joining us there, CEO of OnDeck, saying goodbye as well to Lynn.